Hello all, welcome to my third session on mutual fund investments. And today I'm going to talk about certain tools and strategies that you can apply while doing your mutual fund investments. As a disclaimer, like I mentioned before, I'm not an investment professional, but I'm trying to share some tools and strategies that I used to generate profits out of my mutual fund investments. We already discussed about how to make an investments into mutual funds. You can either directly go to an AMC to buy your funds, or you can either open a brokerage account, or you can directly go to a distributor of your mutual fund and buy it. While there are advantages on buying it directly from an AMC, I personally recommend, especially for a novice investor, to always go through a brokerage to buy the mutual funds. There are multiple reasonings that I have. Maybe I can share a couple of them with you. One, the broker will provide you an interface through which you can buy any mutual fund in the market. Basically, it acts as a superstore where you can go pick and choose the kind of mutual funds that you wanted to invest in. And the broker will also provide multiple tools using which you can basically do multiple analysis, comparisons before you make a decision on investing your money. Secondly, the maintenance of your mutual funds will become very easy. You can get a one view of your portfolio instead of tracking everything together in some other place if you directly choose to invest in an AMC. On top of it, a broker will always give you multiple tools using which you can drill down to your portfolio, understand where exactly your investments are being made, what kind of strategies you need to apply. So those kind of benefits you will get if you're trying to invest it through a broker. I also wanted to give a snapshot view on what are the different top brokers available there in the market. There are many in the market, in fact. But these are some of the large players out there who have a larger client base as well. As on December 21, sorry, Zerodha is one of the top brokers in the country, followed by Upstocks. Of this, I personally prefer ICICI Securities. And the reason is simple. I've been a customer of ICICI Securities for more than 17 years now. And due to my stickiness with ICICI, I always felt ICICI to have a pretty and neat interface using which you can make your investment decisions. But that doesn't mean that you shouldn't be exploring some of these other players in the market. But my personal recommendation will be ICICI Securities, and the entire demo, the entire piece of information that I'm going to share will be strictly based on ICICIdirect.com. Before getting into the demo session, I just wanted to give some idea about lump sum investments versus SIP or systematic investment plan. This is a very important strategy for any mutual fund investor. And I've seen many people, especially elderly people, making a mistake when they try to invest in a mutual fund. Again, this is my viewpoint. People might have different thought process, but this is strictly my viewpoint. Before getting into my point of view, I just wanted to talk a little bit about what do you mean by lump sum versus SIP. A lump sum investment is nothing but you invest your entire money that you wanted to invest in one go. It's similar to your FD. You take, let's say, if you have 1 lakh or 10 lakh rupees, and if you wanted to get some interest out of it, You go to the bank, you invest your entire amount in the bank, and that's called lump sum investment. Whereas SIP or systematic investment plan is like your RD or recurring deposit. Instead of investing your 10 lakh or 1 lakh together, you go to the bank, you set up an RD so that every month on a particular day, a certain amount is deducted from your bank account. And eventually, by end of the RD session, you will be getting that lump sum amount, and you will be also getting an interest rate, which will be prorated in this fashion. The idea is somewhat similar for mutual fund investments as well when you talk about SIP. Instead of investing your entire 1 lakh or 10 lakh, you even it down to multiple days and then invest it. And from my personal experience, SIPs can generate decent returns or great returns comparing to lump sum returns, especially in a fluctuating market. For example, if you look at the markets all over the world, since the beginning of COVID-19 pandemic, the markets have been going up and down very frequently. There is no single day where you can simply predict saying that the markets are going to go up today. Because the pandemic have pushed the limits in such a way that there is very, 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 very less predictability out there. And because of which, you cannot even say what is going to happen a month from now. A simple example is Omicron, right? We thought the pandemic is almost over, and suddenly a highly mutant variant comes into picture, which kind of pushes the number of cases across the globe. And because of that, a couple of days back, the market started to fall. So these kind of things are very difficult to predict. And in such kind of markets, SIP is the only way for you to invest instead of lump sum. And why I say so, I'm going to talk a little bit deeper into it in my next slide. I hope all of you are aware about Sensex. Talking about Sensex is not my agenda in this particular session, so I'm going to simply skip it. But for your knowledge, just understand that Sensex is a way to measure how the markets are being performed. And in this example, I'm going to make an assumption that you are going to make an investment on a mutual fund that strictly follows the Sensex. Let's say you made a decision to invest 1 lakh rupees on day one when the Sensex was standing at 60,000. Now, 30 days later, a month from now, certain events happen in the market, and the market started to fall down. Now the Sensex is standing at 59,000, which means if your mutual fund was strictly following the Sensex as an investment pattern, then you are already at a loss by 1,000 points. "30 days later, on day 61, the situation worsens, like in the case of pandemic, and the Sensex is now standing at 55,000, which means you are again standing at a loss. On day 91, the situation improves. Let's say the pandemic slowly started to wane away. Now the Sensex started to rise, and now it is standing at 59,000. But even if the market have risen, you are still at a loss because you bought or you invested the mutual funds, or you invested in the mutual fund units on day one when the Sensex was standing at 60,000. Eventually, I'm not saying that lump sum investments are bad. Eventually, you're going to make profit if you're patient enough. If you're going to wait for months, years, you will definitely make profits. But in this scenario, you're not being a smart investor. You're not actually leveraging the downs in the market. Because if you're a smart investor, you will be actually leveraging the downs in the market and try to time it in such a way that you're buying at lows and selling at highs. Now let's play the same example when you are investing in a SIP mode. On day one, you're investing, your SIP gets triggered, your SIP one gets triggered when the markets were at 60,000. I'm just going to make a wild guess or wild assumption saying that on day one, when you invested, your 1 lakh divided into 4, let's say 25,000. When you invested at 25,000, you're going to get, let's say, 1,000 units. Now your SIP 2 gets triggered on day 31 when the Sensex is now at 59,000. Now, for the same 25,000, instead of getting 1,000 units, you're actually getting 1,100 units because you're buying at a dip so that you are getting more units than on day one. 30 days later, like I said, the situation worsens. On day 61, when your SIP gets triggered, for the same money, for 25,000, you are going to get, let's say, 1,500 units because the Sensex have further fallen. And now you're standing at 55,000. 30 days later, the situation improves. And now your SIP 4 gets triggered and you're investing the same 25,000. And on day 91, when you are buying the same mutual fund, you're going to get 1,100 units like it happened on day 31. But still, you're getting 100 units more than what you got on day one. And what that means is eventually when the markets go high, you are going to make more money in this scenario than a person who would have invested the entire 1 lakh on day one or in the lump sum pattern. I hope the idea is clear here, right? And especially in a very fluctuating market like what is happening now due to the pandemic, it's always better not to choose any lump sum investments, even if you can afford the lump sum investments. So I will always suggest people to invest, especially people who are expecting returns in the long term. Better you do your investments in a SIP mode rather than investing in lump sum. And this is the reason why I said it's better to open an account through a broker rather than um, directly buying from an AMC, because let's say you wanted to change the frequency of the SIP. So today you are setting up your SIP every month. What if you wanted to leverage the highly fluctuating market, because you see that every week the market is falling ups and down, and you decided to change your SIP from monthly to weekly or bi-monthly. If you have opened account with 5 different AMCs, you need to go and make the changes in these 5 different places. At the same time, if you have a brokerage account, through the broker's interface, you can simply make these changes within less than 5 to 10 minutes. For a passive investor like me, who will not get enough time to manage the investments, I always felt having a broker account is beneficial. I hope the idea is clear. The benefits between the SIP and the lump sum investments. And I'll be more than happy to take or answer any questions. If you can put in your questions in the comment section of the video. In my next video, I'm going to talk more about ICICI Direct, and I'm going to show you some demos using the ICICI Direct interface about how to buy a mutual fund, how to set up a SIP, how to manage everything under one hood. Thank you for watching my video. If you really liked it, please like my video and subscribe to my channel. Thank you.